What if the dream of owning a home wasn't really yours at all, but a calculation designed to drain your future one fraction of a percent at a time? Picture this. You walk into a bank, sign a stack of papers, and walk out with the keys to your dream home. It feels like freedom, but hidden inside those papers is a trap, one that decides how much of your paycheck belongs to you and how much belongs to the bank. That trap isn't obvious. It's just a number, a mortgage rate, and banks know exactly how to use it. Why does this matter right now? Because mortgage rates are shifting again, not dramatically, just enough to change the math on millions of households. A 0.5% move can mean hundreds more each month. That's groceries, that's tuition, that's savings gone. And yet, the decision isn't yours. It's shaped quietly, behind closed doors, by banks and central bankers. Let's break it down. A mortgage is a long-term loan. You borrow hundreds of thousands, sometimes millions, and promise to pay it back over decades. The rate is the price of that promise. If it's low, you win. If it's high, the bank wins. Here's the twist. Banks don't just set rates based on generosity. They set them based on risk, profit, and market conditions. And they know most borrowers will accept whatever rate is offered because the alternative is no house at all. Behind the curtain, banks borrow short-term and lend long-term. The spread between what they pay and what they charge is their profit. When central banks raise interest rates, banks adjust mortgage rates upward to protect that spread. When rates fall, they don't always pass the full savings to you. They keep a slice, quietly. Over decades, that slice compounds into billions. Here's the irony. We talk about home ownership as building wealth, but for many, the mortgage rate decides whether wealth is built or drained. A $400,000 mortgage at 3% means about $1,700 a month. At 6%, it's closer to $2,400. That's $700 more every month. Over 30 years, that's $250,000, not for the house, for the bank. And the absurd part? That rate can change based on forces you'll never see. Global bond markets, inflation reports, investor sentiment in another country. Your wealth is tethered to invisible strings. The hype says, lock in your mortgage, build equity, live the dream. The reality says your equity depends on interest rates, refinancing options, and the bank's appetite for profit. Zoom out, and mortgage rates don't just shape households, they shape entire economies.